Yes, sir. Yes, sir. Yes, sir. The shenanigans continue, my friends. Good morning. It is I, once again, the Savage of Wall Street. All right, baby. How are we doing on this glorious, glorious day? I hope everyone is having a wonderful trading day. I hope everyone knows exactly what's going on today and is taking advantage of all the opportunities that this market is bringing you. I said it once and I said it again. Is that time of the year. So, what are we going to do? Well, we're going to make money, baby. That's what we're doing. So, regardless of what's happening in the market, right? And this is something that, I mean, honestly, we had talked about previously, I believe. Um, the clowns are running the show. The clowns are running the show, and we elected clowns. So expect a circus, my friends. Basically the bottom line of what's going on. Mando number 5 is in the house. Kilua Dre is in the house. And I appreciate you guys for watching. I don't know, man. It's beautiful. It's beautiful. Well, back again. Back again after a nice little hiatus. Hector's in the house. And I know Hector's making money. Yes, sir. I know you guys are making money, man. I closed a lot of covered calls this morning for 80-90% profit. Um, some 2027s even for 50% profit. And this is exactly why I tell you guys, this is why we um, we sell covered calls on days that the stock pops 10-15%, right? And this is why I like big chunks, right? This is why I go out 3 months, 4, 5, 6 months out so that I can take big chunks of premium. And I know it's cute for the people that sell weeklies because they want to get that 3%, 4% every day, or I'm sorry, weekly. And I know that the appearance of it, if things were to keep up for 52 weeks, right, um, would be a massive return. But this is not what the market does. That's contingent upon the conditions staying the same. And that's the thing with the market. The conditions don't stay the same, even from week to week, right? They're so volatile. And this is why I refuse to pay a debit whenever it is that I roll. I just don't understand why people would pay a debit to roll a covered call and say, well, I'm hypothetically making money. You're not making shit. You're giving away hard-earned cash for a hypothetical, right? And people that were rolling SMCI and Nvidia and paying fat premiums or debits so that they can roll an extra $5 to me was wild. I actually got paid, I think, $1,900 to roll some 165 Nvidias um, to 200. No, 175 Nvidias to 200. 2028. I got a massive return, and then that number just scaled down bad, like huge. So same thing with Unity. Unity was popping, and it's still good. Um, and I wrote some 35s to 40s, 40s to 45s, 2020, 28. They were expiring 2026 or 2020. June 2026, or even some 2027s. I rolled them out a year to 2028, and I got $400 per contract, $700 per contract. To move up $1,000 on the strike price to just give up a year, like this hasn't happened yet, right? But some buffoon out there was thinking, "Oh my God, I'm going to make a lot of money," and look what's happening. I'm laughing my ass off right now. I saw some SMCI $60 covered calls for like $22, $21 premiums. Those are like $12 right now, expiring 2028, and somebody really paid that. So this is why I like big chunks. Could I move SMCI? It was at 55. Could I have gone for 57, 58, 60 strike out, a couple of weeks to bring in $100? Yeah, I could have done that. But I decided, why? When I knew we're frothy, I knew, I've been telling you guys we're frothy, right? And then the multiples they just don't add up. Look at the situation we're on. People are getting, they're getting canned when it comes to the jobs. There are no jobs right now, and the numbers that they're giving us are actually false. Not to mention that they're not trying to give us, what the inflation numbers are. They're not real, And when they do give us these numbers for inflation, they're like, this is a real inflation is really, you got to take groceries and gas out of the equation, and it's really at 2.9%, and it's like, what the fuck? Like, do you guys feel like, if you were to take, do you have to basically, do you take your groceries and your energy bills out whenever it is that you make your budgets? No, nobody does. This is a clown show. These guys are just making shit up as they go, and people believe that, and people keep paying these high premiums for stocks. And this is why I tell you guys, write cash at your puts whenever it is that a stock falls 10, 15, 20%, and then go out in time. Take big chunks, right? Take, I don't know, 30% chunks. If you are going to if the stock was at 25 and gets down to 17, write some 15s, go down a strike or two lower, right? 15s out 6 months, and then try to bring in 20% of those 15. So $3. So you're safeguarded up to $12. I was telling people, write some 1250 cash at your puts on Webull out to January 2026, bring in $3. So now Webull is at $12, $11, $10. Great. If you like Webull at 1250, at 13, why wouldn't you like it now? It just makes no sense. So now, people are like, oh my God, I'm down on my cash at your puts. No, you're not. Nothing has happened. You still have 2 months, right? You still have 2.5 months. You're good. Let time happen. Let things happen, right? Right now, I just wrote some $10 cash at your puts up to 2027 on Webull, and then I took that cash and I bought Webull at the strike price. I mean, at market price. I did the same thing with QUBT. QUBT is offering more than 60% or around 60% to sell cash at your put, like $15 cash at your puts on QUBT are like, the return, I don't know, like $8. The $15 ones are giving you $8 right now. That's insane. Out to 2028. What? I just went crazy. I bought, I usually don't do this. I just tell you guys to stay away from it. But like, I personally went and I bought some calls on C3.ai, some $20 calls that expired 2027. It's like, the stock is not supposed to be there. What's happening right now is people are getting called a margin. That's what's happening. People are getting called a margin. Look at NVIDIA. Oh my God, NVIDIA was like a $210, right? Or some shit like that. And it's like people are going nuts and like keep buying NVIDIA at all-time highs. And now it's down to like 180. What do you think was gonna happen? We just $500, $600 billion have just left NVIDIA. Like what? Are you $500 billion, more than that, just left? Where did it go? It's people like me. It went to people like me that are like, oh yeah, great. I'll roll that covered call, to a 200 in 2027. Give me $17, $18. Sure, that's what happened. All right, what do we got here? Kilua Dre say, where have you been lately? What a surprise. Dude, I've been working, man. I told you guys, I was going live almost every day because I was on workman's comp, right? I got hurt at work. And for like 2 months, I was out, and so, um, I mean, I gotta work, right? I need to pay bills. And although I like being home, I like, you know, um, chatting up over here and giving you guys all these like nuggets and making you guys make money, man, helping you guys make money. I love it. Um, I gotta pay bills, right? Um, I did get some donations at some point, and it was like I don't know, like $300 worth of donations, but like in a month, that still doesn't that's not gonna pay my bills, guys. I love you guys, right? But that's not gonna do much. I mean, I appreciate it, and I definitely, I actually bought a new camera. Um, so that's cool. And I paid my internet with that, so cool. But I have to pay the bills, right? The pocket says what the pocket says, and I've been just very busy at work. Um, I think I worked like 21 days straight, and so I'm off a few days, and then I got to get back to work. But I am going to take off. I think right before Thanksgiving, and I'm done for the year. I don't think I'll work anymore for the rest of the year. It's kind of like December. The last 8 years I've been taking off every year. Like that's my vacation month, so that I can spend time with the kids and the wife. So yeah, it's but I am back here now, and I figured I slept in. I've been working 18, 16-hour days and pretty tired. And I finally had time to sleep in, and it was great. I got to see my kids off to school. I got some chores to do around the house. I have this ham that I bought, this Spanish ham, and I got to set it up, in its base and stuff like that. We're going to start eating away at it now. So hopefully by Thanksgiving it's going to be nice. And then it's probably going to take us all the way to New Year's. By looking to eat my own prosciutto at home, bro. That's gonna be cool. Hector, good morning. Wing Commanders in the house saying Savage. What's up, Tobin? Long time no see. I know, bro. I've been busy with work, man. That's what's going on. I saw Cash Cure puts on QUBT, $22. Expiring 127. Should I roll to 2028? I don't roll on the red day. Not cash your puts. You roll those on a green day, So I mean, right now I know that it seems like doom and gloom. It's part of the process, guys. I guess that the Fed decided that they may not cut rates, right? And remember, I told you guys, nothing is baked in, man. Nothing is for sure, and so don't put all your eggs in one basket, and don't think that just because everybody's baking in this 3 rate cuts, I guess, for it's not 100, right? Like you guys know Jerome Powell is not afraid of the executive branch, right? He's going to do what's best for the economy, and he looks at things like long term, right? So sadly, that's not what a lot of economists are doing. They want the stock market to be at all-time highs, or when it's not justified, right? And I mean, the way that you knew this was not justified, and the way that I told you guys these are the red flags. I told you watch out is when these companies start kind of cannibalizing each other, right? I guess that's the wrong word. More like prostituting themselves to one another would be the word, because there's no new consumers, right? There's new customers. People are not buying products at this point, and if they are, it's not. They're looking for bargains, and so Nvidia starts inking deals with Microsoft and with Salesforce, right? And then they start inking deals with Google, and then Google will ink deals with Facebook, and Microsoft does something with Facebook, and it's just they're just it's not real. They're just saying, oh, we're gonna, this is a $500 million investment on blah blah blah, but it's not. Nothing has moved. It's just fugazi. It's not. It's not real, guys. So look. Right now is a day for opportunity. I don't know how to put it. I don't know how else to put it. Today I went ham. I actually been busy all morning. That's why I came on a little late. I was selling cash secure puts all morning. I was buying actually calls expiring 2027. I was buying stock at market price, like QUBT. I bought a few hundred shares at market price. I bought some Webull at market price, some BMNU at market price, BMNR. I bought BBAI at market price. Did I mention QUBT? I think I did. I actually bought Open at $4.95. I actually went in about 100 shares of. I knew that the apes we're gonna just buy. It's just they've been buying at 8, at 9, at 10. I was like, right now they're gonna look at it for like a 2-for-1, and I was okay with it going down to 4 or 3. I mean, it's a gamble, right? But I did buy some at $4.95, and it started moving up. I bought some AI market price. I bought some RX at market price. Let me see. My SOXS is looking great. I've been averaging down on that. It's just SOXS is going to go to $10. It's just a matter of time, right? I bought BMNU at market price. Let's see. I bought a couple of hundred shares at $10.99. So let's see, $10.99, and it's $12.31 now. So it's just averaging down, guys. This is part of the game, right? And this is what I don't understand why people kind of do what they do, right? But it's very interesting, the psychology aspect of it. When Nvidia was at 200, people were buying it. They were like, oh my God, I need to buy FOMO, right? Fear of missing out. So they buy at 10, at 200. It kept going up. So they chased it up to 201, 203, 205. And then it tanks. Now they're scared. They're like, oh my God, I lost $2,000, $3,000. Oh, what do I do? And it's like, you Nimrod, you bought at 200. Why wouldn't you buy at 180, 170? It's just like the company's still the same. It's like the mother goose of them all, the mother hen, if you will, right? It's too big to fail at this point, right? Like everybody's at Nvidia and we know it. It's just money moving around. People are getting margin called. A lot of people are selling, panic selling, right? Don't be that person. I saw something on the Discord and I thought it was hilarious. I was like, it's one character is just laughable to me. He's like a cartoon character. In the dummy, SoFi was at $20, and it's like this guy is like 2250s. I don't like cash secure puts. I'm not gonna do 20s. But now the dummy's selling $30 cash secure puts, and it's just like, what? Like, what are you doing? It's like, which is nothing wrong with that. But what I'm saying is like, it's 50% more, right? Like you didn't write 20s, but you're writing 30. It's like, don't be that person, right? Just keep. Whenever there's an opportunity to write at 20, you write low, right? And it's just like, just let them bleed out, and if you make 60-70% return, close them and then go move up the ladder. But like, don't be that guy. Don't chase. It's like, it's no need to chase. It's just there will be days like this, and then there's going to be days that it's extremely green. And that's when we ride our covered calls, BM&R. I wrote some $35 cash puts out to 2027 and brought in money. I mean, it's just, that's what you do, right? People were writing $15 cash puts on Webull out to 20, like, right? 1250s to 2027 now, average down, right? So it's just opportunity. Like when it's this low, right? Cash puts out to 2028, bring in cash like 40-50% and then buy at market price and get your average low, right? That's how you play this game. Don't be afraid of red days. And then we keep going down, great. Then you buy it lower. I mean, it's just, it happened already so many times. This is what happens to the market. We are frothy. We're due. I've been telling you guys, we're due for a pullback. We're due for a heavy correction. Like 3%, 2% is nothing. We're due for a 15-20% correction easily. But there's some stocks that are going to take a bigger hit than others. And sometimes they, because of the rotation, right? You're going to see opportunity. Like stock that's down 40%, 30% right now is not necessarily going to be the stock that's going to get down 30-40% later. It's going to be other stock. It could be like SoFi. SoFi hasn't really had a big hit. There's no need to, right? But it doesn't mean that it won't take a hit. Like SoFi could very well go to $20. That's great if it does. It's great if it does. And then you go and then you sell $20 cash secure puts out to 2028. Free money. And then you go and use that premium to buy at market price. And if it goes down to 15, you sell some 15s to 2028. Bring in more cash so you can buy more shares and then bring your average even lower. We go up 15-20% on SoFi. Great. Sell some covered calls. SoFi was at $32, $31. I was telling people, dude, sell 35 for 2026. Sell to June 2026, 35, 40s. Bring in $3-4. Right now, you'd be laughing your ass off. But people get greedy. It's going to go to 50. But it's going to go back. I mean, it has to come back and cool off, right? This is what happens, guys. It's the market. Welcome to the fucking Wild West. I'm from California. I live in the Wild, Wild West, baby. This guy right there has been there for a few months, and I've been telling you guys, right? And although once in a while the cowboy's going to come out riding the bull, I tell you guys, my stocks I'm bullish on. That's what I say. I was like, my stocks I'm bullish on. That doesn't mean I'm bullish on the market, right? The Savage 20 are beautiful. Opportunity everywhere, but all right, what do we got here? I sold on Yuga $22, $127. Oh yeah. So Mando, yeah, I don't like rolling cash secure puts in a red day, man, because they're worth less, right? So you want to go when the IV's higher and so on a green day, which helps your rolls, and obviously the cash secure puts, are worth less. But that's kind of what you want, because that way, instead of those $22 expiring 127, if let's say QUBT goes back to $20, right? Those 22s are going to be worth less, obviously. So you can then roll from 22s to 17s in 2028. So you're basically bringing in $500 worth of collateral, right? And then you may even get some premium. So now, instead of being out, $2,200, you'll be out, $1,700, which is fine. Think of it as like money in the bank, right? And especially if you're in an ETF like Charles Schwab ETF that's bringing you in 5%, so that's a win, right? Because you're stacking at that point. So yeah, Wing Commander is saying, I'm looking at cash secure puts offering like 50% on BBAI and VTS. I sold those. Yeah, that's where I've been all day, all morning. I've been bringing in 50-60% profit on cash secure puts, because I know the stock has no business being there. And if for whatever reasons we're bearish to the point where like those are in the money next year, great. And I just got paid to buy a stock at half price, basically, right? So what is wrong with that? Something that I would have paid for right now, at this moment, whatever it's worth, it's going to be worth less next year. So what's wrong with that? Cheapies. You're buying stock at a discount. I don't see the problem. Karen D saying, you're back. I never left. I mean, I just, I was not online, but, I'm around and I'm on the Discord here and there. I've been so busy, man. And, you know, um, making money here, making money there. Just I'm at that point in my life where like I'm trying to make as much as possible so that I could just dump it into the stock market. And then I have no debt. I paid down all my debt except for the mortgage. I mean that's the house. But like whenever I bring in a lot of capital, I'll take $10,000 and I'll dump it into the principal of the house, right? And then that brings down my payments a bit. So a 30-year mortgage for me is going to be closer to 15. I wish I could pay it off earlier, but there's just so much going on, and I have 3 kids. We have a lot of expenses. But yeah, man, if I can pay off in 15 years a 30-year mortgage, I think that's the goal. Because this is obviously the biggest expense we have, right? Is the mortgage. And once that's done, I think there's going to be so much more financial freedom, and that's kind of what I'm trying to be, hopefully, with you guys conveying, so that you guys can maybe get an idea or two and be like, hey, why don't I pay down? Use my cash secure put money to pay down some, principal of my house. It'd be great. Pay down debt, student debt, uh, loans in general, car notes and stuff. Like those siphon a lot of life out of you. You don't want to be like in the hamster wheel all the time paying interest. Like interest is what kills us. And I try not to pay interest at all, especially with credit cards. I hate carrying a balance. I hate paying interest. It just makes no sense because I like my points. Matter of fact, PlayStation 5 guaranteed to get paid by points with American Express. Yeah, baby. I'm gonna get a bundle too. That's what I'm saying. So, Wing Commander, I like those cash you can put, man. BBAI and MVTS. I mean, MVTS has an Nvidia contract, right? And BBAI, it's honestly it's free money, man. It's a cash grab. I like it, dude. Daddy L5 saying, finally cut a live show, though. A bit late. Greeting sandwich. Hey, you haven't missed much. We're just talking about the red markets, man. We're just talking about capitalizing on a red day like today and bringing in 40, 50%, 60% premium on cash secure puts out to 2028 at this point. And some people may look at it as like, oh, but you're locking in your capital for so long. And it's like, I don't really have a savings account, right? Like what I do is I have a Charles Schwab ETF that I dump my savings in, and then what I do is I on those savings I say, okay, I'll sell $150 cash secure puts in Nvidia out to 2028. Bring me some money. Give me some money. So now let's, for just a random number, $10,000, right? Say I have $10,000 in savings. Well, I could get 5% of $10,000, which is that ETF brings me in. So that's basically by next year, right? Next December, next October, I'll have $10,500. There's nothing wrong with that. That's a very healthy return on my cash for not doing anything, right? But what if I took those $10,000, right, and then I sold a cash secure put or cash secure puts on it and could bring in $5,000. So now I'm going to get 5% of not $10,000, but $15,000, which is a lot more. And because it's my savings, right? I'm not looking to. I'm looking at very, 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 very safe cash secure puts, and 2028 is 2 years. So then I'd be getting, 5% of, let's say, $14,000 or $14,500 for next year. And then 12 months later, I'm looking at 5% of not $14,500, but like maybe like 15,600, right? And so it's just that's my savings, right? So and that's the way that I look at it. Those are extremely safe. Like 180 Tesla cash secure puts, 150, 140 cash secure puts in Nvidia, $150 cash secure puts in Microsoft. And if for whatever reasons the market was down to the point where those actually get assigned, great, great. I just bought those companies at that price, and I got paid to do so, right? Same thing with BBAI and VTS. You go out to 2028, bring in 50, 60%, so we're talking about $5,000, $6,000 on $10,000. And then you're going to get 5% on top of that, right? What's wrong with that? You tell me if there's anything wrong with that logic, and then we can have a really healthy discussion. But I think that there's nothing wrong with that at all. Hot Wing Mike is in the house saying, "What's up, degenerates?" Yes, good morning, my fellow simpletons and degenerates, scallywags, and near-do-wells. Your boy is live again. I just look. There's so much opportunity, man. Ricardo Canales is in the house. How we might say the cost of wings these days is killing. Well, that's why you don't buy wings. You make them, bro. You go to like an Asian grocery store. Asians actually have some pretty cheap wings, or chicken wings, and you could just make them yourself. I go to this place called 99 Ranch, which is this Asian superstore, and they'll have wings for like $1.99 a pound sometimes. Sometimes you get lucky, 99 cents for a pound. So I get like 10 pounds, and then I'll cut them up, and then I'll make them myself. The air fryer, pretty awesome actually. So yeah, man. But yes, I can see how the cost of wings is in fact killing you, my friend. So yeah, guys, there's so much opportunity out there right now. Archer Aviation, right? 754 right now. 754. It was like, let's see, what was the I sold some $12 covered calls on it. Let's see. Expiring 127, expiring January 2027. And some amazing, wonderful, smart person decided to give me on 10 contracts, $3,700. That's $3.70 per share. So a contract has 100 shares in it. That's $370 per contract times 10. Those are now worth $2.01. And this was on June 13th that I made this move. I sold one January 2027 contracts, and I'm up 45.95% at this point. How about that? That is wonderful. And I'm doing nothing. I'm going to do absolutely nothing until probably January or February when that theta has decayed to the point where these twos are going to be like 110, right? In which case I'll be like, you know what? I made 66%. 70% in 7 months. Do I want to wait another 12 months for the other 30%? Probably not. And then I'll buy the contract back or the contracts back, and then I'll sell some more covered calls. It's just amazing. People are just God, And then my average cost on these are $589. I'll sell some sevens and to 2028. I don't care. It's just money. And then sometimes you'll go underwater and then you'll be like, oh man, but on days like, today, the weeks like today, it's just you laugh because you're like, I can't believe somebody was that stupid. Like GME, I sold at like $24 a share. couple of weeks ago, and I kept like 25% of my position on shares, and I sold some $25 covered calls expiring. I want to say April. Let's see, expiring April 17, 2026, and they gave me 315 per contract, and those contracts are now 261, $25 covered calls. And then I was just like, people were like, "Oh, you shouldn't sell covered calls in GME because it's gonna go to 30." Da, 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 da. It's just like, dude, what? I sold my warrants. I was like the first day at like $4 and something per warrant. I don't know. It's not personal, right? Like it's just the fucking stock. It's not. Just make money. You're here to make money. What? Just take the cash. Take cash off the table. Now the stock is at 21.46. You didn't sell at 24, 25, 26. Why? Capitalize on it, right? Sell some covered calls. I don't know, man. SMCI, Jesus. SMCI, beautiful, beautiful. My average cost is $26. I sold $55 covered calls. My average credit for those 2033. Right now, those are 1260. This is why we take big chunks, man. This is why it's right here. This is the proof why you take big chunks. People like to write these weeklies and bi-weeklies because in their head, I'm gonna make 4%, 3%, 4% monthly, and it's so much money because it's gonna stack and blah blah blah. It's like, fuck, just why don't you just take 40%, writing fucking out, right? I mean, my cost basis is $26 on SMCI, right? I was like, basically, I'm gonna sell $55 covered calls, right? They paid me $20.33. So my cost basis is 26. I'm basically getting paid almost my whole initial capital back, and I'm selling at $55 a call. If I get taken out, I'm making $5,500 per 100 shares. What is wrong with that? I just don't understand. And then people, get all caught up with like, oh, but what if it goes to 100? Like, what if it goes to $20 fucking again? I don't understand. Take money off the table. I sold some 60s on this MCI. I sold some 60s for 1957. $60 calls expiring 2028. And some genius decided to give me that money. What? I'm up over 40%. And I'm going to do nothing. I'm just going to leave it there. I offered to sell my stock for more than twice of what I bought it for in the future. And somebody gave me pretty much almost, my cost base is $26, but I get $2,000 back. So now my cost basis is at $6, and I'm gonna sell at $60. That's a $5,400 profit. What? Why wouldn't I take that money off the table? And now this contract's $11.68, and I'm not gonna do anything. I'm just gonna leave it there and teach them a fucking lesson. And then if it goes back up, it goes back up. I don't care. The whole point was to take money off the table and use that cash for something else. That's how you make money in this game, guys. Everybody's getting killed. Sano 1 is 1626. It's such a great company. Such a great company. These guys are so much better than CrowdStrike. And CrowdStrike is like, what is CrowdStrike? These are $16, right? What is CrowdStrike at? CrowdStrike's $529. CrowdStrike Holdings is $529. Right now, for like 5% of that, you can buy Sentinel One. I was talking about CrowdStrike when it was $130 a share. I was like, that's a great company. Great company. And then I found out about Sentinel One. I looked at what they did. They've never gotten hacked on like CrowdStrike. Um, that's where the money wants to be. That's fine. But I wouldn't pay $500 a share for CrowdStrike. No way. But they're SentinelOne at $16 a share. But let's see here. Open is at 640. That's awesome. I bought at 495. Let's see here. BBAI 546. Yeah, man. Nothing wrong with that. I actually bought this morning at 543, right at market price. It was 543. There'll be a few hundred shares. And if anything, I'm averaging up because I didn't think it was going to go this low. $7 cash secure puts are 350 right now. I mean, that's 50%. Like, you could make a trade for 351, 355, put a stinker out there, see if it gets filled. But I mean, you're bringing in more than 50% of capital. What? On a cash secure put of a company that's actually pretty legit. It's gonna be, this stock is gonna be $20 a share. It's just when, we don't know. Just like I was telling you guys, SoFi is gonna be $30 a share. SoFi will be $50 a share. We don't know when, right? Like, I don't have that magic 8 ball. If I knew that, I would be sitting next to Jerome Powell right now, right? Fucking next to Donald Trump, making billions of dollars. But that's just not the way things work. Here we go. Rocket Technologies or Rocket Companies, 1556 a share right now. This is a real estate play. Listen, rates will be cut. Okay, we don't know when, but rates will get cut. And so, whether it's this year or next year, when Jerome Powell's term is up, and then Donald gets one of his sycophants in there, I assure you, we may not see like 2%, interest rates again, but we'll see 3. And so we may see 3.5, right? Rocket's going to make a lot of money. There's no houses being built at this moment, right? But things will get back to normal at some point. And this stock is going to be $30 a share. Right now it's at $15.58. That's where it's at right now. $15 cash secure puts, expiring January 2026. $14.50 cash secure puts are giving you $85 right now, on average. The stock is at $15.58. Will it go to $14.20? We don't know. But the $14.20 cash secure puts are bringing you in almost $100. What is wrong with that? That's a pretty safe bet. Let's see here. IOVA, it defied logic, and it ran like 25% yesterday, I think. And I sold $4 covered calls expiring 2027, and some genius gave me $1 per share. So I basically, my average is 185, I think, or one something. And I'm basically saying I am willing to sell it for twice what I bought it for, or more. And someone gave me $100 per contract times 10. So that's $1,000. So those $1,000 I'm going to use to just, buy stuff for Christmas. Thank you, gamblers. You know what I mean? Let's see here. Mando number 5 is saying that he grills his wings. Those are delicious, actually. I grill wings sometimes. They're pretty tasty. I just do the let's see, Tony Cacciateri's with a little garlic, salt. I coat them in. You know what? I throw in a little chicken bouillon sometimes too, some pepper, and let's see, what else do I throw in there? The lemon pepper condiment, and that's it. I don't do much with the grilled ones. I mean, that's Tony Cacciateri has a lot of shit in it. And then I just, when they come out, I toss them in some parm cheese, and they're freaking delicious. So that's kind of how I do those. There's so many different ways to do it, right? I love the Chinese chicken wings, man. I go on TikTok and I look at different ways that they make some Chinese chicken wings. You gotta understand, China's a really big place, so they're gonna make them differently in Shanghai than they do in Guangzhou, right? And so it's just there's different ways to make them, but those are fucking delicious, man. Especially if you guys can at some point have like an extra hour or two in your day, and you want to make your food pop. Um, Go to a Chinese spot and buy some MSG. I shit you not. That makes everything taste so much better. I'm telling you, especially if you make fried rice, you throw some MSG on that shit, man. Oh my god. There's a reason Chinese food is so delicious. And it's fucking the MSG, I'm telling you. But you gotta go to a real Chinese spot. You can't be like fucking what's that place that everyone likes to go to that they say it's a Chinese restaurant, but it's really not. It's Americanized. Panda Express. Panda Express, man, that's not Chinese. It's just Americanized version of what Chinese supposed to be, but it's not really Chinese. Go to a real Chinese restaurant where fucking they're killing the chickens out in the back. Or they're like, they're scaling the fish back there. Like that's the one you want to go to. All right, let's see here. Howie Mike saying I got my Archer adjusted average to 275. Still have open January 26, $15 cover codes written. That's wonderful, man. That's great. Those 15s, January 2026. You could buy those back right now, and you could sell some 12s, 2027. So, and essentially, you're coming down, $3 on the strike, but you're going to bring in a lot more profit, especially if you're going to 2027. It's just free money at this point. Count those loss though. So basically, you're selling at $12. Okay, your average is 275. You're fucking quadrupling your money almost, right? Or more. So what? I don't see a problem with that. And then you're bringing in more capital. And then you could use that capital right now, and you can buy some Weeble at 9.30, some QUBT at $12. I went ham with QUBT today, and I bought at, let's see here, at 11, I think 11.99. Did it go to 11? Yeah, I did. 11.95. And so those triggered. Weeble I bought at 9.50. I bought some BBAI. Let's see here. I bought some RXRX for sure. I bought BMNU, BMNR. I bought some C3.ai, and I bought calls. Those Unity rolls are beautiful, man. I rolled Unity 35s to 45s, and 35s to 40s as well, and 40s to 45s, and I brought in a lot of cash, and that cash I'm using it to do other stuff and buy cheapies everywhere, man. There's opportunity everywhere, guys. It's just it's gotta know where to look, man. It's just don't be afraid of days like today when everybody's getting margin call and people are saying it's doom and gloom. Expect bigger pullbacks, man. It's just at this point, take advantage of what the market is giving you, right? But don't be scared if the market drops another 5%. So what? What the end game here is for you to make money, right? Sell cash secure puts. Let's see here. And MVTS right now is down 16%. That is wonderful. That is wonderful. Cash secure put the shit out of it. MVTS, some March cash secure puts, some $7 MVTS cash secure puts could bring you in $165 right now. So $7 will bring you $165. What is wrong with that? Nothing. This is a company that has inked some contracts with NVIDIA. It's nothing wrong with that at all. You're bringing in, over 20% um, of return on investment right off the bat. And you're basically saying to the world, I'm willing to buy this company at $7. I'm on the hook for it. And I would like $165 for my troubles. Stock is at 737 at this point. It needs to come down another 37 cents for you to be in the money. And if it happens, great. You're making a good investment. You're essentially buying for $535 100 shares. I don't see anything wrong with that at all. At all. It's down massively right now, 16.92%. Matter of fact, I'm gonna sell some cash at your puts myself right now, because that's a steal. That's a steal, man. Anyhow, all right, my fellow simpletons, I'm going to be getting out of here, man. Oh, look at this. See you saying Jude K saying, hey, Savage and all. What is up, Jude? How you doing? How we might say, take everything, take all their money. Take all their money indeed, my friend. If you sold some covered calls, they're in the 80%, 90% range, buy them back today. Buy them back today. And come down the strike price. As long as you're not below your average. That is the key. Never write a covered call when you're below your average. That's just silly. You're losing money. Okay? If you bought something at $10, don't sell $9 covered calls. Right? If you bought something at $10, sell some 12s out a few months. Bring in a couple of dollars. That's how you do it. Right? Anyways, Alex, Evening Savage wrote some RX cash kill puts earlier $4 strike expiring January. Got 54 cents for them. That means $54 to buy RX. That's $4. That this man is going to buy RX for $346. $346 is what he's willing to pay for them. Nothing wrong with that, my friend. Nothing wrong with that at all. That is a great entry point. It's free money. It's free money, man. It's a cash grab. Just taking candy from a baby. That's what you're doing. It's just you're just stealing money. It's great. I love it. See, I love that. Make the money, guys. That's right. One, you just got to make that money, man. Make them pay. Make them pay for everything. Take from them everything and give them nothing. That's what it is. Give them nothing. Take everything from them. And don't be if you're underwater on your Webull, cash at your puts, you saw some 15s, you're burning $4, so what? You're basically, your break even is $11. You're down $1. So what? You like that at 15. You like it at 14. You like it at 13. It's at 10. What is wrong with that? Sell some $10 cash at your puts of 2027. Bring in some more money. Let's see. What is Webull giving us? Webull cash at your puts. Let's see here. You go to 2027, right? You sell some $10 cash at your puts on Webull. You could bring in $360 right now. $360. That is 36% return on investment. Worst case scenario, you're buying Webull at like $6.40. What is wrong with that? The stock's at $9.32. So what? It's a good company. It's gonna make money. It's a direct competitor to Robinhood, and it's contagion. Everything is down, guys. It's just everything is down. You think that the price over earnings? I mean, forward P ratios were fucking 700, 800, 900, 1,000 on some of these companies. That's just unsustainable. What do you think was going to happen, guys? I don't understand. I don't understand. You guys really think that like Palantir is worth $225? Like, really? It's not. It's really not. I've been telling you guys, I own Palantir. Yeah, it's not worth that. I just, we are frothy. Expect some more pullbacks on green days. of, the stocks jumping 10, 15, 20%, sell covered calls out 6 months, bring in a lot of cash now, right? And then use that money however you see fit. You know your life better than I. You have some bills you need to pay them down with that money. Covered call money. It's free money. It's getting paid to own the stock. The stock has to pay rent. You are the landlord, okay? The portfolio is a building that you own, and the tenants are the stocks. Make them pay rent. Anyways, thank you so much for watching, guys. I appreciate it. I'm the Credit Savage of Wall Street, baby. And back at it again. Today is Friday, huh? I don't even know what day is today. I'm looking forward to going on live on Monday to see what the stock market's bringing us. Maybe I'll go on live Sunday night, to see how things are shaping up with this government shutdown and with everything, the way that it's happening, with the economy. It's just expect more pain, guys. Expect more pain, man. But don't be surprised if you get a lot of green here and there. Take advantage of it. Take what the market gives you. Don't get caught flat-footed. Don't get greedy, because that's what happened to a lot of people that bought Nvidia at $200 a share, 225, 210, Palantir at 225. I mean, it's just people were paying ridiculous amounts of money. QUBT. I told you guys, there's a lot of companies that were like SMCI, right, and ASTS at $60, $70. They ran too fast. NVTS was at $15, and I owned NVTS, and I sold some $12 covered calls to 2027. Those are down. I mean, it's just take what the market gives you, bring in a lot of cash, and if you get taken out, you bought a stock at $10, you offered to sell it at 15 in 2027. If you lose it, in 2027, you sold at 1,500, you bought at 1,000, you brought in $3-4 of premium on the fucking stock. What is wrong with that? Nothing. Bulls make money, bears make money, pigs get slaughtered. Don't get fucking slaughtered. Don't get caught holding the bag. Make your tenants pay rent, right? That's how we do it. I'm the Savage of Wall Street, baby, back at it. We're ready to make some money. I'm gonna be here daily starting in November, mid-November. So let's get ready to make some dough, make some money for the holidays, and hopefully we'll have a great Thanksgiving and a great Christmas. But right now, let's get through this trading days. You guys, I'll see you guys tomorrow. No, not tomorrow. Sunday evening at 5 p.m. California time. I'll be here. Hopefully I'll see you guys. Have a great day, my fellow simpletons. Until then, peace out. Take care, all. Late.